Japanese candlesticks are a popular tool in technical analysis to help traders visualize the price movements in the financial markets. They were first developed by Japanese traders back in 18th century in order to analyze the price movements of rice. But as for today, they are used to analyze the prices for various assets like stocks, commodities, and even currencies. In this video, I will cover the anatomy of candlesticks, different types of them, and how we can get the benefit out of reading them correctly. Please stick with me until the end of the video because there are a lot of golden points which I want to tell you, and they are going to directly affect your trading strategy. And believe me, it doesn't matter if you want to trade on cryptocurrencies, stocks, commodities, or any other type of assets. These candlesticks are the fundamental basics which you need to read and you need to know in order to become a successful trader. Let's start by looking at the anatomy of a Japanese candlestick. Each candlestick consists of a rectangular body and two thin lines that extend from the top and bottom of the body, called the wicks or shadows. The body represents the difference between the opening and closing prices for a specific time period, while the wicks represent the range of price movement during that time period. There are three types of Japanese candlesticks: bullish, bearish, and neutral. A bullish candlestick occurs when the closing price is higher than the opening price, indicating that buyers were in control during the time period represented by the candlestick. Conversely, a bearish candlestick occurs when the closing price is lower than the opening price, indicating that sellers were in control. And of course, as the name says, the neutral candlesticks are telling us that the market is in indecision sequence. So as you can see, from the toppest point up to the bottom of a candle is called the range of the candle. And these are the wicks, or let's say the shadows, as you can see. Not all of them have shadows. Some of them have, some of them they don't have any, which I'm going to talk a lot more about them. But here we just want to know the candles. And then this is the body of the candle. It is really easy. Don't make it hard for yourself. Don't go easy on yourself. The red candles, or let's say bearish candles, always they open from up and they go down. So the open is on the upper side and the close is on the downside. And for the bullish, or let's say green candles, is the opposite. So they open from the bottom and they close on the top. This is the reason, if you take a look at here, always the candles openings are right after each other. So if there are a couple of green or bullish candles right after each other, so each candle opens right after the candles before it where it closes. So it is the close of this candle, then next candle opens from here. And the opposite is the same. If there is a bearish candle occurring right after our bullish candle here, so it was the close of the bullish candle, and then on the bearish candle this is the open, and then it goes down. But you really don't need to know this kind of stuff. These are only for getting to know the anatomy of the candles. Then there are lots of indicators doing the job for us and showing us the average or the closes of the candles, which are important to us. Opens are not really important. We are working with the closes of the candles, but I'm going to talk about those later on a lot. Traders use Japanese different candlesticks to identify patterns in price movements that can help them make trading decisions. They are divided in three main categories: single, two, and three candlesticks patterns. The most common single stick patterns are hammer, inverted hammer, dragonfly doji, and bullish spinning top, which are bullish candlestick patterns. Next, we have neutral or basic patterns, which are doji, spinning top, mariposa, and star. And last but not the least are bearish candlestick patterns, of course, the single ones, which are exactly the opposite, peer-to-peer, one by one, opposite of their equal in bullish candlestick patterns. So hanging man, exactly opposite of hammer. Or let's say hanging man is exactly the hammer, but it happens when the price wants to be reversed from a resistance zone, which I'm going to talk later on. And then we have shooting star, which is exactly opposite of inverted hammer, gravestone doji, opposite of dragonfly doji, and bearish spinning top, which is exactly opposite of bullish spinning top. The name is crystal clear. But remember that these patterns only work on supply and demand zones, or let's say support and resistance areas. So if you haven't checked my previous video, go check it out. I leave the link above here because it is mandatory to be watched before you watch this video. Well, let's start introducing the single candlestick patterns one by one. The hammer occurs when the opening price is higher than the closing price, and the lower wick or shadow is much longer than the upper wick. This pattern indicates that sellers were in control early in the time period, but buyers stepped in and pushed the price back up. Now let's go to the chart and make an example. Let's find one hammer. Yep. We have one here. Alrighty, this is our hammer. The color doesn't matter really if it is green or red. It is not important. But if you take a look at here, so what should it look like? Is it exactly should be not having a wick on the upside? Let me make it really easy for you. You must see something like this. There is a rectangle like this, and there must be a wick to the downside. And the size of the wick must be 2 times more than the body of the candle. So if we divide the whole range of the candle into 3 parts, the wick must cover more than the half, or let's say more than 70% of the whole range travel. If there is a small wick to the upside, it doesn't matter. It's not important. It's not that important. But if there isn't any, it's even a more powerful signal for us. So what really happened here? This is our support zone here. We have a support zone which is supporting the price to the upside and bouncing the price to the upside. As you can see, and we said before, the sellers wanted to push the price to the downside, but the buyers came in and pushed the price up. By the time it is the 15 minutes time frame, it means each candle takes 15 minutes to be formed, to be opened, for example, from here, and to be closed from here. And then in the case of our hammer here, so it was opened here, it went all the way up to here, as you can see. Let me zoom in more. So it went all the way up to here. We don't know when exactly. Maybe it went at the beginning or came down, then came down or went up, but it happened. And it went up and then down, and then the buyers pushed the price up, and our candle closed here and formed our beautiful hammer here. So what the hammer does, you don't really even need to remember the name of the candles. You only need to know there is a body with a long wick to the downside to our support level. It means that the price is about to bounce off to the upside. It went up. Did it go up? Yes, it did. And it worked beautifully. Let's make another example. We had another, I think I've seen one more here. Yes, here's our support level, and you can see we have a really nice body here, and the wick or the shadow is 2 times bigger than the body of the candle, this upper shadow is not that important. And as you can see, it worked again and pushed the price to the upside. These are really strong signals. But can you only trade with these? Of course not, because the market is not always working like this or always going to your expectations. It is full of surprises and you have to be ready for them. But we are trying to increase our tools and strength in order to predict the best prediction for the future of the market, whether we want to scalp in low time frames or we want to be a day trader or a swing trader. It doesn't matter exactly. What we need is money in the end of the day. Well, the next one is the inverted hammer, which is more or less exactly like the hammer, but let's say the hammer is more stronger in terms of giving us a signal as price reversal, but we can even use inverted hammer as a strong bullish signal too. Let's go to the chart and find some examples. Well, this is an example. So you can see the inverted hammer formed here, and exactly right after that, the price bounced up from this level and went up, and you can see how beautifully it worked, and the price went up. Next, we have Dragonfly Doji pattern. As you can see, it happens exactly like the hammer, but it is less stronger in terms of giving us a signal, but it works. It happens on a support zone, makes the price to bounce off from there. So these are the signals that we can look for. So as you can see, this is our beautiful Dragonfly Doji here, and this is our support level, and it made the price to bounce off again, and it went up beautifully. And last but not the least, in the list of single candlestick patterns of bullish ones is the bullish spinning top. As you can see, there are 2 wicks equal to each other, and there is a body, a small body in the middle, which this again causes the price to bounce off a support area and reverse from there and go up. So we can take the long positions after seeing this pattern. But these are, again, only confirmations. We cannot trade only with these. Let's go to the chart and find some examples for this one too. So as I said before, the color of the candles when we want to look for them are not really important. The important part is to find and determine the support and resistance levels correctly. And then the color of the candles are not really that much important. This is exact one Dragonfly Doji here, and then right after that we have one bullish spinning top. So this is even a more stronger signal to go long or go for a buy position. Or even before that, if you can see here, we talked previously, we can see a hammer here. So these are all strong signals. If we took a trade here, let's see, we wanted to go long, so we need a confirmation candle. If we took this trade, it was, as you can see above here, this number here, it was 0.49, let's say almost 50% of profit. If we use leverages like time hour profit here, like 10x leverage, it was like 5% profit, which is extremely good. It is massively good. Well, that was the end of bullish candlestick patterns, single candlestick patterns, of course. Please go find them out for yourself on the chart and practice. And if you have any questions, just leave them in the comments below. I would be really happy to answer them. Well, now it's time to talk about the bearish single candlestick patterns. This one is the hanging man. The reason is obvious from the picture, as you can see. I hope that is not a harsh picture for YouTube rules. So a hanging man is a bearish reversal candlestick pattern that occurs after a price advance. The advance can be small or large, but should be composed of at least a few price bars moving higher overall. The candle must have a smaller real body and a long lower shadow that is at least twice the size as the real body, which the rules are exactly as the same as for the hammer, but that was a bullish candle reversing the price from bottom to top. It means it was occurring on a support area, and in this case this is exactly opposite, and it's happening reversing the price from top to bottom, and it's happening at the resistance levels. Let's go to the chart and make some examples. Alrighty, as we talked before, these kind of patterns, they only are validated while they are happening on support. Let's change the color to green. On support and resistance areas, then we can count on them. So if you take a look at here, let me zoom in, and you see a beautiful hanging man. You can see there is a small body. Let me just zoom in more. Small body here, and then a long wick or shadow to the downside, and it causing the price to reverse from this resistance level and going down. As you can see, in this case, it happened beautifully. The next pattern which I want to tell you is the shooting the star. As you can see it here, it is exactly like hanging man, but it's reversed and it is upside down. And if you want to make an example, equal example in bullish candlesticks, it's exactly like inverted hammer, but it's happening on top of the price movement on a resistance level, and it's causing the price to going down. So if you see a signal like this here, two of them happening right after each other, it's a strong reversal signal, and you can count on it. Of course, it depends on your trading strategy and the time frame and the asset and the market that you're trading in. It depends on lots of elements, but let's forget about all of them. We think that we have a trading strategy, and this is the last signal and confirmation that we want to get, and yes, it is a good one. So we can just enter a short trade. If you don't know what is a short trade, you have to watch my previous videos. But if we take a short trade after the confirmation candle, which is here, which I'm going to talk about later on, what are the confirmation candles are. So we put our stop loss here, and then we took a trade here, and you can see it was a pretty good profit. Wow, it was amazing. Just like that, you had a beautiful trade, making money for you, making you happy trades. Well, the next one which I want to tell you is the gravestone doji. It's exactly like the shooting star, but the only difference is that the body is so small or almost not there. So if you can see, this is, let's zoom in. This is the shooting star, and this one, this little guy here, this one is the gravestone doji, but the names are really not important. I told you before, the only important thing is to correctly find support and resistance levels and wait for these patterns and combine it, of course, with our trading strategy, which we haven't come up with yet. But the names are not really important because the names are not money going to your pocket. The names are just some symbols. You can call this, I don't know, whatever you want. You can call it upside down inverted hammer. You can call this Thor's hammer. Whatever you want to call it, it doesn't matter. I don't use the name though. I just look at them and see, okay, there is a long wick here. It means that the price doesn't want to go that way. It means that the sellers are coming to the market and they are overcoming by the power the buyers. So they push the price down. So first the buyers came in, they pushed the price high, but they couldn't win, and the sellers came in and they pushed the price down. So it occurred this candlestick here. It means that the price tends to go down. As you can see, it was a free fall for the price, and boom, it went down. And you can see, again, if you determine the support and the resistance levels correctly, again here, the opposite happened. Here's a hammer and the price went up. Wanted to go up, yeah, a couple of times, and then went up. Finally, this is all about it. You have to determine support and resistance levels. That's what's all about. Okay, here's with bearish spinning top. This is this beautiful little guy here. As I told you beforehand, the color doesn't really matter. It's just like the size. If you take a look at here, it just caused the price to be reversed from this resistance level and going down. If we just come here, and it's causing the price to go down. What I really need you to do, and it is really important, this is critical, you have to go to your own chart, whether you're using your laptop, your PC, your mobile app, whatever you do, just go to your own chart and try to first find the support and resistance areas. Second, try to find these candlestick patterns and see if they work. And if they didn't work, see what was the reason. Did you find the support and resistance levels? And if you find them correctly and they are breached or broken, like in this case here, for example, so of course the support and resistance area, as I told you beforehand, it's not going to last forever, so they can be lost, and that's part of the game. But I need you to go and find them for yourself. And we call this market watch. Watch the market. Try to find these examples. Did they work? And if you have any questions, just please feel free to shoot and ask me in the comments below. I would be really happy to solve your problems and answer you one by one. That's my pleasure. Last but not the least are the neutral or basic patterns, which I want to cover up here. Let's dive in. The doji occurs when the opening and closing prices are equal, resulting in a very small body and long wicks. This pattern indicates indecision in the market, and traders often look for confirmation in the form of a bullish or bearish candlestick before making a trade. Let's go to the chart and see what it is all about. This is a really good example here. As you can see, this doji candle occurred here. It means the market is in indecision. It means none of the buyers nor the sellers cannot overcome each other's power here. So they cannot push the price either up or down. So we need to wait on this resistance level, let's make it red, and wait for some confirmation. So next we can see the bearish spinning top, then we can see the other, and these are the two candlestick patterns, which I'm gonna talk in upcoming sessions, but we can see more confirmations which tells us that the price will go down. And as you can see, the price reversed from here, couldn't manage to continue going up. So these are neutral patterns. Either they can just continue going up or they can reverse. So we need to wait for some confirmations. And it is the same for the rest of the neutral candlesticks too. Let's starting off with bullish and bearish kicker. This pattern consists of two candles, with the first being a large candle in the opposite direction of the trend, followed by a smaller candle in the direction of the trend. A bullish kicker indicates a bullish reversal, while a bearish kicker indicates a bearish reversal. Now, let's go to the chart and make some examples. Well, as you can see, there is a really beautiful bullish kicker happen here, and this is S&P 500 index 1 hour chart. How to set a chart like this, I talked about it previously, and you have to check my previous videos, which I'm gonna leave the links down in the description. But the other thing which is really important is that we only can rely on these candlestick patterns. It doesn't matter if it is a single candlestick pattern, two candlestick pattern, or even a three candlestick pattern. They must occur on support and resistance level, or let's say supply and demand zones, which we can rely on them. If they happen in between the way, they are not reliable. So here we have our support zone, and this is our bullish kicker. Why kicker? Because the open of our new candle has a distance kicked off from this area from the close of the previous candle. So it's the previous candle kicked the new candle off, and this is why we call it a kicker. And then it made the price to go up and hit this resistance level here. Let me change the color to red. Yeah, beautifully went up, and we could go long or take a long position here and take our benefits and profit out of the market. Yeah, you can see it was like 3.72% profit with 10x leverage. It means timing our profit. It was like 37.2% of profit, which is a big wow in this case. So here's a really good example of a bearish kicker. So let's first draw our support and resistance levels here. So this is our resistance level, which made the price to bounce off and go down. And this is our support level here. And let me change the color to green for the support level. And you can see this bearish kicker here. And if we took a trade, a short trade, or go short, or let's say go selling off the asset, and we took a trade down to this support area, it was like, you can see 7%. If you use 10x leverage on this trade, oh my God, it was 70% profit in a matter of hours. Or let's say, yeah, it was 5th of May 2022 at 4:30 p.m. And then it hit our target in as you can see down here on the chart, on Wednesday 11th May 2022, 10:30 p.m. And in this period, in only, let's say, 6 days, in a week, you took a profit of 70%. So if you've entered with a volume of $1,000 into this trade, just like that, you had $700 profit. Who can make money out of $1,000, 1,000 bucks like that? I don't think so, anyone rather than a trader. So let's get to the rest of the stuff which we wanted to talk about. Next one, which is really reliable, and we're gonna use this one a lot during our trading course and in our trading career. And you can use this as a strong reversal signal in any market, any time frame, any type of trading. This one is so strong. Are bullish and bearish engulfing candle patterns. This pattern consists of two candles as well, with the second candle completely engulfing the first. A bullish engulfing pattern indicates a bullish reversal, while a bearish engulfing pattern indicates a bearish reversal. Now let's go to the chart and make some examples. Let me draw this support level here. And then I must wait as a trader for the right time. You know, as a trader, you must be like a hunter and wait for the right moment, right time to enter a trade. So when I could take this trade, when was the best part? To wait, for example, let's say I only want to wait as a confirmation, not only the signal that I want to enter a trade. These are not signals. These are only confirmation signals, not any ordinary signals. We are not about to trade with them. Keep that in mind. Mark my words. That's not going to work. I'm waiting for an engulfing. What is an engulfing? As I told you previously, here you can see it beautifully. The wicks, the shadows are not important. There must be a candle with a good body. When I mean a good body, it means, it shouldn't be a doji candle like these here. But there must be a good body. By good body, I mean a healthy body like this. It shouldn't be a doji. For example, this one here, you cannot call this an engulfing because this is a doji. This is not even a body. But in this case, it's a healthy body, and then it's covered completely but by the next bullish candle, and it's causing the price to go up. Did it go up? Yes, it went up beautifully. So if I wanted to take this trade, and let's say we encountered here as our resistance level. Why? Because there are so many hits on this point. And how to determine them, again, you have to watch my previous videos, which you can find in the description. But if I wanted to take a trade here, let's see, It is Bitcoin, 1 hour time frame. So I want to enter a trade here, set up my stop loss here, and then take a trade up to here. And let's say how much profit was it? Oh my God, look at that. 11.51% if you only use 10x leverage. It means timing our profit and of course loss, which I'm going to talk about later on, don't worry. But just simple story. If we use 10x leverage, it means 11.51%, 10 times bigger. Go take your calculator and see how crazy that is. It is such a big wow. Let's make an example for now at the moment for bearish engulfing. Before making an example, there maybe you ask yourself, oh, I see lots of patterns happening here. Why they are not working? First, I told you before, you are not supposed to only trade with this. We have to combine a lot of information before we enter a trade. It's like, imagine yourself as a sniper. You want to hit your target. You have to calculate the wind. You have to calculate the sun orientation, your target's movement, if it is still, if it is moving. And our target here is always moving. It's not a still. So you must be a pro in being a sniper. So I'm going to teach you later on. You have a strategy for trading. It's called the sniper trading. But imagine yourself always as a sniper, as a hunter. So you have to determine lots of things. That was the first reason. The second reason is that maybe you are not finding the support and resistance levels properly. Again, I insist you go watch that video about that. Let me draw this resistance level. And as you can see, we have a beautiful engulfing here. As I told you, it shouldn't be a doji. So it's not a doji. It is a healthy body. And then it's covered by the next candle. And the next candle, if you can see it here, we have two bearish spinning tops here. And then it comes right after that. It comes in a bearish engulfing. So it's a strong signal. And you can see that this is the support level here. Let me change the color, put it to green, and you can see it beautifully. It had a sky fall. It was like a, stone thrown from the top of the mountain. And if you took a short trade here, you wanted to take profit out of here. Oh my God, 6.443. Forget about the rest. 6%. 6% is crazy. If you time it in 10, using 10x leverage, it's like 60% profit. Who can make that money? Except for you if you become a professional trader. Next one is the haramis. Bullish and bearish, of course. This pattern consists of two candles, with the first being a large candle, as you can see in the picture, and the second being a small candle with the body of the first. A bullish harami indicates a potential bullish reversal, while a bearish harami indicates a potential bearish reversal. Now let's go to the chart and make some examples. So what is a harami? I told you before, but why we call it really harami? Because it's like a pregnant lady. If you just imagine this as a candle here. So this is our bearish candle going down. Then we must have, let's see, it has wicks like this. The next candle must be within this candle, but the main difference with the engulfing is that in engulfing, this right candle must be bigger than this one, and the wicks was not important. But in harami, all the range of the next candle must be within the body of the previous candle. So in this case, we have it exactly here. If we draw our support level here and we wanted to take a trade here, all the range of this candle is within the body of this candle. So we call it a harami. So if you wanted to take a trade here, we should have done like this and had our stop loss here and go long like this. And it was our target point here and just like that. And the bearish harami is exactly just opposite like that. I don't want to waste your time anymore. You can go find them for yourself and practice as much as you can. Piercing line. This one is only bullish, and it is not like the previous ones that we say bullish and bearish. So this one is only a bullish signal, which reverses the price, make a reversal in the price in the market from a support level to the upside. This pattern consists of two candles, with the first being a large bearish candle. The second being a bullish candle that opens below the previous close, but closes above the midpoint of the first candle. This pattern indicates a potential bullish reversal. And of course, you can find this not in the cryptocurrency market, and you can find it in other markets. Next one is dark cloud cover, which is exactly opposite of piercing line. And again, you can find this only in any market rather than cryptocurrency market. This pattern is made out of candles, with the first being a large bullish candle and the second being a bearish candle that opens above the previous close, but closes below the midpoint of the first candle. This pattern indicates a potential bearish reversal. Piercing line and the opposite of it, the dark cloud cover, they are only occurring in stocks, commodities, forex market. I don't want to tell you that they are not important. They are, of course, important, but you can go find them for yourself as a challenge, accept it from me. But you must search for them in lower time frames, like 5 minutes, 15 minutes, even 1 minute. See if they cause the price to reverse from a support or a resistance level. Tweezers bottom and tweezers top. This pattern consists of 2 or more candles with equal lows. Tweezer bottom or equal highs. Let's say tweezer top. A tweezer bottom pattern indicates a potential bullish reversal, while a tweezer top pattern indicates a potential bearish reversal. And why we call them tweezers? Because they look like a tweezer. Now let's go to the chart and see some examples for these as well. Okay, here's with the tweezers bottom, which makes a reversal of the price from a support level. Let me draw this support level here. And it makes the price to go up and hit another resistance level. Let me draw this too. And just like that, you can see this is our tweezers bottom, which is a bullish signal. If we took a trade here, you can see both shadows, both wicks are at the same level and both bodies are at the same level too. It's exactly like a tweezer. And then from here, if we took a long trade, we put our stop loss just here. If we took this trade up to here, it was like 3.35. If it makes it 10 times bigger with a 10x leverage, it was like 33.5% of profit, which is crazy good. The tweezers top is exactly the opposite. Just find them on the resistance areas for yourself. Feel free again to ask me any questions pops into your mind. In conclusion, we can add up these 2 candlestick patterns to the previous one, the single candlestick patterns. And by combining them with finding really good support and resistance areas, or let's say supply and demand zones, in the end, we're going to combine all of this information to come up with plan A, plan B, plan C, all the way to Z, trading strategies for different types of the market. Because let's make an example. You cannot always drive your car with only one sets of tire. You need winter tires, you need summer tires in order to use them in a specific time in a right place, right time. Here in the markets, financial markets, especially cryptocurrency market, with various times that the market goes volatile or goes crazy, variations are really high. You need to have different sets of tires. You need to be prepared for different scenarios. So those means different trading strategies. And we're going to come up with them combining all this knowledge together. So this is the reason I'm trying to give you information one by one and not making them so long or make them so complicated. And you have to practice and ask me any questions comes into your mind. Feel free, don't be shy. I would be really happy, and that would be my honor to answer you one by one. So if you like the content that I'm making for you, please just like my videos, hit the subscribe button if you haven't done it yet. Candlestick charts are an important tool used in technical analysis, and understanding these patterns can help traders predict market trends and make informed decisions. Let's get started by exploring the bullish and bearish 3-line strikes. The bullish three-line strike is a three-bar pattern that indicates a potential reversal in a downtrend. As you can see in the picture, there is a big green candle covering the previous three red candles. And this is the reason we can even use the word engulfing. This is another type of engulfing because one candle is engulfing not one candle before it, but three candles. So it means it is even more stronger signal. If you see that somewhere, you can be pretty confident as a confirmation signal that you can combine it, of course, with your trading strategy, whatever it is. Then on the other hand, we have the bearish three-line strike engulfing, and this is, as you can see, exactly the opposite of the bullish one. Let's waste no more time. Go to the chart and see how we can find them. But before that, if you want to trade crypto on one of the best crypto exchanges platform out there, I highly recommend to check out Bybit. It has one of the lowest fees out there, lots of good features. I talked about it previously, especially if you're a beginner. I highly recommend to watch my tutorial on Bybit, but it doesn't matter if you want to trade on other platforms, it's going to work out for you as well. The link for that video is down in the description. But if you want to take even more benefit out of trading on Bybit, you have a chance of winning up to $30,000 of a mystery box by just signing up into Bybit, and by using my affiliate link down in the description, you have an extra chance of winning an extra $5,000 worth of USDT. So don't miss this chance. All you need is just to sign up, do your KYC procedure, deposit at least 100 USDT and start trading on it. Well, I found a really nice example on the chart. This is XRP USDT 5 minutes chart. This is an example for bearish three-line strike engulfing. I make this example, then you can go to your own chart and find as many examples as you can for both bullish and bearish. It doesn't matter. Only you need to encounter right supply and demand zones, or let's say support and resistance area. And this is the resistance level here. Previously, we talked about in the single candlestick session, 2 sessions ago, I told you that these patterns only matter and they give us good signals, or let's say confirmation signals, when they happen on supply and demand zones. So here is a resistance area, and then you can see it here. Let me zoom in. You can see it beautifully happened here. 3 small green candles, and then 1 candle is engulfing all of them. And then did the price go down? Yes, it did. So if we have our support level, which is supporting the price here, let me change the color to green. And then you could take a trade and have an entry here. Our stop loss would be here. And our take profit was here. And it was a profit of 3.2% of profit. And if we only use 10x leverage, it means timing our profit, and of course even loss if we lose it. In 10, it means 32% profit, which is crazy good. It is crazy good. Oh my God. So go to your own chart and find these examples, and you can just find the opposite example here. It happened right after that. 3 small red candlesticks, and then 1 green is engulfing all of them. And if we took a long trade here, again, just right after that trade and going long here, if we continue this all the way, and you see how beautifully we could take 2 trades, 130% here and 142%, almost 43% here, how much money you want to make. And then even if we just take a look at here, let me make it disappear for a moment. We had 1 double bottom pattern here, which I talked about previously. You have to check that video too. These are all giving us signals that, hey, go long, hey, go short. The chart is talking to us. Maybe you are a rookie, but you are not a beginner who doesn't know anything about the market in the first day. Just imagine when you first looked at this chart and you told yourself, oh my God, what are these all symbols? What are they telling us? And now you can see that they are talking to you. You are like a neurosurgeon looking at these kind of graphs coming from our brain and looking at, and you say, what are they telling this doctor? But they just take a look at them and say, okay, for example, someone has a tumor, or someone is okay, or someone has migraine. And you are becoming that neurosurgeon, that doctor in the hospital. You are the doctor of your own chart, so you can understand everything. Next are 3 white soldiers and three black crows. Three white soldiers and three black crows are both triple candlestick patterns that are used to identify a potential reversal in a trend. Three white soldiers are formed by three long bullish candles that close higher than the previous close. This pattern suggests that buyers have taken control and the trend may continue upward. In contrast, three black crows are formed by three long bearish candles that close lower than the previous close. This pattern suggests that sellers have taken control and the trend may continue downward. Now let's go to the chart and see some examples. You can see it beautifully here. See, 3 and in this case even 4 green candles. Before that we had 2 times giving us a good signal that the price tends to go up, and then it jumped up just like that. If we took a trade here or even here, put a stop loss here, and as you can see, it was with a 10x leverage, it was like 38%, almost 40% profit. If you see, I'm using profit and leverage. These are the things which we're going to talk and discuss later when we want to talk about how to work with exchanges and take our real trades. But now we are only paper trading. It means that we are trading with fake things. It is a fake trading. We're only trying to market watch, see how our analysis work. Let's pause here and take a more detailed look at the chart. Here's a really good example for what I've told you before. So this is our support area and this is our resistance area. I told you before, the signals and let's say candlestick patterns, they only work only on supply and demand areas, or let's say support and resistance levels. Here we have 3 white soldiers, right? 3 really big and strong candlesticks giving us a signal that the price tends to go up. But remember, 3 white soldiers are reversal candlestick patterns and they are bullish. It means they must happen on a support area like here, down here. If they happen on a resistant area, it means that they worth nothing. You cannot rely on them. In this example, in this particular example, we have 2 times on this resistant level that you can see we have 3 white soldiers, but the price is not going up. Why? Because this is not the right place for them. 3 white soldiers or any other candlestick pattern or even chart pattern, I repeat, the bullish signals only happen and you can rely on them on support levels, on support areas, and vice versa. The bearish signals, you can count on them only on resistant areas. So if you see for example 3 white soldiers here or any other bullish signal, single bullish candlestick, double or even triple, and they are happening, they are bullish signals and they are happening on a resistant area, they are not reliable. Do not take a trade. See, it happened here again. 3 white soldiers, but it's not 3 white soldiers. It's nothing. It's just looking like 3 white soldiers. It is a 3 white soldiers when we have 3 white or let's say green candles, good candles, healthy candles. By healthy candles, it means that they are not doji candles and they happen on a support area. But here you can see this is the resistant area and we have 3 black crows or let's say 3 red crows, and you can see how beautifully it worked. And before that, we have this beautiful bearish spinning top, which we talked previously in the single candlestick patterns. Before that, here we have a hanging man. We have lots of signals here telling us, hey, this is a resistance level. I want to go down. So you only need to practice, go to different time frames, how to switch in between time frames and work with the trading view platform. Guess what? I made a video for that too. Switching between time frames, in between different assets, go to forex market, the stocks market, commodity markets, crypto market, and try to find as much as you can. Don't say, okay, I found 1, 2, it's enough. Go and find them. Believe me, you have to practice. You have to find support and resistance areas. And even if sometimes you see that you have pretty much good signals, 1, 2, 3 signals that they are telling you that the price tends to go up and it doesn't, see what was the reason. If I told you in the previous session the reason and you can determine that. So that's really good. You have to keep practicing. If you don't know and I haven't talked about that, just feel free to ask me in the comments below. Next is morning and evening doji stars. Morning and evening doji stars are also triple candlestick patterns that can indicate a potential reversal in a trend. The morning doji star is formed by a long bearish candle, followed by a doji candle, and then a long bullish candle. This pattern suggests that buyers are taking control and the trend may soon reverse. The evening doji star, on the other hand, is the opposite of the morning doji star and is formed by a long bullish candle followed by a doji candle and then a long bearish candle. This pattern suggests that sellers are taking control and the trend may soon reverse. See, this is our resistance level. Let me check the color, change the color to red. You can see how the price moved here. Just before that, which is this one here, this is the evening doji star. Just try to be, you are a smart person. If you haven't, you wouldn't choose to be a trader. So you're a smart person. Look for other definitions and signs on the chart too. So just right before that, let me put it like here. Right before that, we had a bearish spinning top here, and even if we combine it with the next candlestick, it wasn't a bearish engulfing too. So now we can see this evening doji star, and we must be aware of the fact, all right, the price tends to go down. Did it go down? Yes, it did. And it could have made us really nice profit. There's our support level here. And let me change the color. If we took a trade here, just like that, and boom, it was a profit of, oh my God, it was 7%. If we use 10x leverage, it was a 70% profit. Can you believe that? How much time? Let me tell you. Just check below here. It's in black. Wednesday, 22nd March 2023. It was at the midnight, and then it hit our target the same day, 4:40 a.m. in 4 hours, 40 minutes. You made 70% profit. Can you imagine that? So if you only entered this trade with $1,000, you would have made like $700 in 4 hours, let's say almost 5 hours. What kind of job you want to have to make this kind of money? But again, these are not enough for trading, believe me. If you go to the market and you want to trade like this, you're going to wipe out your whole account, and then you're going to say, okay, he said it is all right. No, it is not all right. There are tons of things you need to know. Believe me, it is not as easy as this. I'm just going to the chart and trying to find some examples in some specific places in the market, but you have to be ready for any type of the market. If I just zoom out, look at this mess. We talked about this. This is for our previous sessions. Look at this mess. You have to be prepared for all of these movements, all of them. And it's not always moving the same, believe me. So as you can see down here, we have other 3 candle patterns too, like bullish abandoned baby, free outside up, free inside up. But these are rare, and these are only the combination of other patterns. But you can just go to the market, go to your own chart, and if you're just checking out for other patterns, if you see them, let's see for yourself if they work out or not. In conclusion, understanding triple candlestick patterns like 3 white soldiers and 3 black crows, bullish and bearish 3 alignment strikes, engulfings, and morning and evening doji stars can be a valuable tool in predicting market trends and making informed trading decisions. We always have to use these patterns in conjunction with other technical indicators. Of course, we have to have a proper risk management, money management system. And in the end, we're going to have several summarized trading strategies, which we're going to help us making really good money within this market. Thank you for watching. If you really like the content that I'm making for you, hit the subscribe button if you haven't yet, and share my videos with your friends so they can take the benefit out of this free professional course too. And please don't forget to leave a comment below if you have any questions, or just share your love with me. or tell me if you want me to cover something, talk about anything specific for you, or even if you think that I'm not talking good about something, try to help me to help you get better. Thank you. Bye-bye.